Published accounts from the 2014 paper. So it says here Danner PLC, and the figure is from 2013. So balance sheet of, so my template here on this side of Danner as at 31st of 12th, 2013. I've just put the first two account policy notes: stocks of value lower cost net realizable value, and land not depreciated, buildings 2% straight line. Okay, so stock is 90,000. So I'll put that in here. And put that up. That'll have to be included when I do my cost of sales. So I need to do a note for my cost of sales. So I'm expecting opening stock, purchases, and then closing stock. So closing stock we said is 90,000. Land cost 110 was sold for 130. They want to revalue the buildings at 900. They want to incorporate this value in the year's accounts. So that means my tangible fixed assets we know is going to be 900,000. And we know that there's going to be in my reserves, there's going to be a revaluation reserve. I need to calculate that. So I might as well do that first. So notice I'm dealing with my adjustments first, and then I'll move on and deal with the rest of it. And as I go along, I'll end up doing a lot of the calculations here. So revaluation reserve always has two things in it. It's got the increase in the land and buildings, and it's got the provision for depreciation. So all the depreciation up to the time that I depreciated, that's all taken out. I'll give me a total, and I'll go to my revaluation reserve. So while I'm at this, I'll do my accounting notes for, just quickly checking here, for tangible fixed assets. Okay, so note number 3, I'm going to leave for now. Actually, might as well do while I'm at it. Financial fixed assets, unquoted investments. So this is an investment which wasn't on the stock market. I didn't buy shares in something. The directors think it's worth 60, but the value that we have is 70. So it's probably gone down in value. So the investment is 70 grand. We now feel it doesn't say in the accounts that we have to provide for that decrease. So we just think temporarily is the difference of 10 grand. We're, according to the principle of prudence, we could take it away, but we weren't asked to do that in the question because we just feel it's a temporary devaluation. Now, so tangible fixed assets. So we've got buildings, and we also have depreciation of vehicles. Where does it say here? Depreciation of buildings is a straight line. Vehicles depreciated 20% of cost, so I'm going to include that here. So buildings are 2% straight line. And so vehicles are 20% straight line. Okay. So tangible fixed assets. So we have the balance at the beginning, and then we have purchase, we have disposal, revaluation, and the balance at the end of the year. Okay, so the balance at the beginning of the year for land and for buildings is 750. The vehicles at cost is 240. So the total is those two added together. Now, land which cost 110 was sold for 130. The company revalued the buildings at 900. So the building, it cost 110. So the land cost 110. So I get rid of 110. I didn't buy anything. Purchase is 0. I didn't buy any new. So therefore, those two taken away is 640. So my revaluation is 640 taken away from 900, which is 260. So the new figure then is going to be 900. Okay, so the vehicles then, and I will have to do, there will be depreciation on that then, I'll come to do that in a second. So the straight line, there was no purchase or sale of buildings during the year, vehicles depreciated, no mention of purchase or sale of vehicles. So we assume that the vehicles and vehicles can't be revalued. So the end of the year is worth 240. So the total for the year, or total for the tangible fixed assets, is going to be those two together. So my tangible fixed assets is, it's going to be that figure minus the depreciation. So I'll come back to that in a second. Deal with our depreciation first. So that's the asset. So we have our provision for depreciation. So balance first the first, then we have our depreciation expense for the year, then we'll have taking away a disposal, and then we'll have our revaluation. So the provision for depreciation balance for buildings is 81. For vehicles, it's 25. Now, at the end of the year, we valued our buildings. So therefore, during the whole year, the buildings were worth the old figure. And depreciation is 2% straight line. Okay, so it's 2% of the 750. Oh, let's take that. 750, that's it. Okay, so there was a disposal, but it was disposal of land, so that land won't have any depreciation attached to it. So I won't be taking any depreciation out of the 81 for the land that I got rid of. So my revaluation is going to be 81 and 15, so it'll be 96. And that 96 is taken out of it, so it's minus 96. So that means that there's 0 left in my balance at the end of the year. I go up to my revaluation reserve, so we know 260 and 96 are put into my revaluation reserve. So land and buildings had to be increased by 260. Provision for depreciation is 96. So the total of those two added together. So 356 is in my revaluation reserve down here. Just checking there's no other revaluation reserve there already. So there isn't. So the revaluation reserve is 356. Depreciation for my vehicles. Okay, no, we didn't buy or sell any vehicles, so it's going to be 20% of the 240 figure here. No disposal, no revaluation is possible, so So my opening balance is my net. So net book value is the 1140 minus the provision for depreciation 1067, and that goes up in my here in my tangible fixed assets 1067. Okay, that's that. Debenture interest due, we'll work all that out. So let's start. Yeah. So I've dealt with revaluation here, provide for debenture interest due, auditors' fees, directors' fees. So I'll need to start looking at my list of expenses here. So I'm going to have my distribution. I'll have my administration. Now, and my provide for debenture interest due means I need to work out how much debenture interest should I have paid and take away anything I did pay. So have a quick look here for anything I did pay. It doesn't say anything about debenture interest. Oh, it does, yeah, 5,000 debenture interest paid here. We should have paid 5% of 350. We didn't pay enough, I'm assuming. So 5% of 350 is 17,500. We paid 500, so we know that that's going to be included in creditors. And those creditors are going to be included in the amounts funded during less than a year. So the figure that we should have paid is 350 times 0.05. We take away from that the 5 grand we paid. So 12.5 grand is due. So again, just looking at my basic structure here, interest payable for the year should have been 17,500. And again, that figure is 5% of 350 grand. We have to include auditor's fees. So auditor's fees admin. Auditors is 15. Directors is 50. Corporation tax, put that in. And that's to be provided for. So those things, none of those things have been paid yet. So they'll need to be included in here. Tax is 90. Auditors is 50. Directors is 50 and 15 for auditors. So I'll put my tax in here. Tax is minus 90. Included administration is receipt of 3 grand for patent royalties. So that's money that we've received, and it was put in as a receipt into an expense. So we need to take that out and put that in, and that's a regular way that we earn money. So that would be put in as another operating income. So I'll put that in here. So that's 3 grand. So if that was put in, so I need to take that out of my administration expenses. That's 3 grand. I might need to squeeze some more lines in here so I can get the rest of those in. Now, so patent royalties are taken out of there and it's put in as an expense. Now, that would have made a suspense. So if that was included as an income, just so we understand the pluses and minuses here. Patent royalties is an income which would have been a credit entry. If it was put into administration expense, a credit entry would have made the administration expense smaller. So to take it out, I'll have a debit entry which makes administration expense bigger. I'll have a credit entry here in my income account. Where are we now? Operating income, so it's 3 grand, not 30 grand. So that would be credit entry there. So that means this patent royalty is actually a plus, not a minus. That's tricky. I haven't seen that been put into a question before, where you have to understand that something like this is going to be a plus rather than a minus. You have to have a pretty good understanding of the debits and credits to be able to cope with that. So we've done our depreciation. Now we need to share our depreciation. 25% is distribution and 75% administration. And this is depreciation for buildings. So depreciation of buildings we have down here. 15 grand. Okay. So it's a quarter of that. So the rest of it is admin. No person vehicles depreciated at 20%. So vehicles is to deal with getting rid of or moving our goods. So that's a distribution expense. And we said that was 48 grand. Now, the patent was acquired in first attempt, 120 grand, amortized over 10 years. The amortization is included. So up here in cost of sales, I'll put my patent in here. I'm just going to squeeze an extra line in. So patent write-off. So it was acquired in the 1st of the 1st 2010 for 120, amortized to 10 years in equal installments. So that means I would be taking away 12 grand a year. So it's a tenth of that. And then the patent figure here is, where is patents? Patents is now 84, so I'll be taking another 12 grand away from that. That's another cost. So the patent up here, it says 84 grand, so that's a number of years already been taken away. We're taking away another 12th. So if we go into intangible fixed assets, 84 minus another 12, so 72 grand. Okay. So we've now dealt with these. We can go and deal with the rest of them as we go through. We've dealt with all of those figures down there. We have our fixed assets done. Quoted investments, cost, market value, so, and unquoted, 70 grand. Oh, I forgot about my quoted investments. Market value is 110 and so I need to include that in my notes down here. So the share investments, quote investments means they were quoted in the stock market, so invested in shares. Were worth So all I'm saying here is that it's gone down in value. It's the same as the other one's gone down in value, but the directors reckon it's going to come back up again. So they decided not to incorporate that in accounts, not to have a loss in the accounts. Okay. Now, one other thing actually I forgot to deal with down here is the fact that when I sold my land, I made a profit of 20 grand on the sale of land. That's not something that happens on a regular basis. That'll be a non-operating income. And I'm not been asked to include this in the notes, okay? I could have a note with my tangible fixed asset for that sometimes, but I wasn't asked to actually explain it. So now I can start putting all the rest of the figures in. So we have debtors and creditors. Nothing's happened to change my debtors, so they're still 290. So debtors is 290. Creditors, we have trade creditors here as well as the other ones. So creditors 198. So we get a total. So 365,500. Opening stock is 82. Paid and withdrawals administration expenses are 230. So this is the trial balance figure for administration expense, 230. Distribution cost is 260. $311,750. Purchase sales 100. So the sales is that figure there. Put that straight up. Purchases. Now, I'm not doing the totaling here just yet, and you don't necessarily have to total these notes just yet. It depends on how you're doing for time. Problem with this question is I only have 25 minutes in the exam to do it because of the section it's in. So, purchase sales development. Rental income is another operating income, so that's 30 grand, and I'll add that on to the other operating income I have, the 3 grand paid in royalties. Rental income, profit and sale land 20 grand. I've already dealt with that. Dividends paid is 22. It doesn't say anything about more dividends. So my dividends proposed, which normally a creditor would put in there, is 0. Bank is 81. That's a plus, so that goes in here. On the debit side, because I have money in the bank, it's not if it was over here, I know that it would be a bank overdraft. So VAT is another creditor, so I need to stick that in here. And VAT 65 grand on the credit side. And that changes my creditors amounts falling due. No, I didn't let it. Profit and loss balance at the beginning is 41. Investment income received quoted and unquoted, so the total investment income now. I'm just looking up here, there's no percentages listed beside these investments, so there's no guaranteed amount of money that comes in. So I'll add those two together, so that's a total of 3.5 grand. Now, down in this section here where we've interest payable, we'll have to squeeze in an interest received or an investment received because it's not a regular income that we get. So, so if you remember, operating profit is a profit made from day-to-day, operating of our business. The non-operating income is profit and sale land, and this is other income as well, and that's 3.5 grand. capital we have is 500 and 200. Now, normally I would be separating the dividends here into the two, but I have a total figure and I wasn't asked to do any notes to explain my dividends. You don't have time in the exam for that. So call up capital in total is 750. Those two. Provision for bad debts 20 grand, so that means I'll take that 20 grand away from this figure here, 270. So my debtors is actually less by 20 grand. Debenture interest paid 5, I've dealt with that, and discount is 11 grand, so that's discount. That's on the credit side, it's not a discount expense, it's a discount received, and that's something that happens on a regular basis, so that will be operating income. So I'll add that to my 33, so that makes 44. What I would be doing in the exam is, if I make a mistake like that, forgot to include something in here, I just put a single line through it and put the correct figure beside it. It may not look the neatest, but it's the fastest way of getting through the exam. So we're now ready to add everything up. We've been at this long enough. Another 3 or 4 minutes will probably get the total done. But I hope that makes sense and that you understand the logic of what we tried to do. Thank you.